This chapter is the first of two payroll chapters. In this chapter, we'll learn how to calculate gross earnings for employees, which could include overtime pay if the employee is eligible for overtime pay. We'll also calculate withholding taxes for employees, and we'll learn how to fill out the payroll register and the employee earnings record. In the next chapter, we'll figure out how to calculate the payroll taxes that employers pay. We'll find out that some payroll taxes are paid by the employer, some are paid by the employee, and some are paid by both the employer and the employee. We'll also learn how to fill out payroll tax forms such as the W-2, W-3, 940, and 941. So as we go through these two chapters, this slide is a good reference tool to see the big picture of the payroll process. There's no need to memorize it, but come back here often to review the process. So when we're working in payroll, and I do have experience working in payroll, it's super critical that you are accurate. Any mistake with the payroll affects both the employee and the company. And trust me, if you are a penny off, if you're a penny short in paying an employee, they will let you know. If you pay them too much, they may or may not let you know. The payroll process must also be on time. We have to ensure that employees get their paychecks on time and that the government receives their taxes on time, otherwise the fines could be huge. Obviously, we must obey the payroll laws, and those could be federal laws, state laws, and local laws governing payroll. And you need to make sure that you keep the payroll data confidential. When I was working in payroll, one of my coworkers accidentally left a whole bunch of employee information, including social security numbers, at the copy machine. So you have to be really careful that you don't screw up and let some of this information out. So learning objective 1, we'll be calculating gross pay, net pay, and employee payroll tax deductions for federal income tax. Now there's going to be lots of acronyms, abbreviations in this class. So whenever you see the word FIT, F-I-T, that stands for federal income tax. We'll be using that a lot. We'll also be calculating payroll tax deductions for SIT, which is state income tax. And then we'll learn what FICA, OSTI, and Medicare are. So we'll go through and define these. But first, employees are either paid hourly. So if you're paid hourly, you are only paid for the hours that you work. If you work more than 40 hours in a week, you get paid for those extra hours. If you work only 30 hours in a week, you only get paid for the 30 hours, not the full 40 hours. Because remember, 40 hours is the standard work week. 8 hours times 4 days a week. So employees are either hourly or salaried. Salaried means if an employee is salaried, that means they're paid a fixed dollar amount. Like me as a professor, I'm salaried. If I work 60 hours in a week, I get the same amount of salary. If one week I work only 20 hours, I still get the same amount of salary. So hourly employees, we'll find out, are eligible for something called overtime. Overtime means if you work more than 40 hours in a week, you get paid a higher amount per hour. Salaried employees are not eligible for overtime pay. Not usually. Almost never. And now a company could be really generous and say, oh, we'll give you overtime pay if you're salaried, but that's very rare. Now, the pay period, if you see the word or the phrase pay period, that means the frequency that employees are paid. This could be technically daily, weekly, biweekly, semi-monthly, monthly, quarterly, or annually. So the two most common are biweekly and semi-monthly. And students get these confused quite often, and it's easy to get these confused. Biweekly means an employee is paid every 2 weeks. So how many pay periods how many paychecks would you get if you're paid every 2 weeks? Well, you take 52 weeks in a year, divided by 2, gives you 26 paychecks if you're paid biweekly. And then the other one that people get confused with is semi-monthly. Semi-monthly means twice a month. So how often is the employee paid if they're paid semi-monthly? Twice a month, that's 24 times a year. So biweekly, employees are paid 26 times a year, semi-monthly, 24 times a year. That's important to understand the difference. So let's review. What's the difference between biweekly and semi-monthly? Biweekly means what? Every 2 weeks. Semi-monthly then means twice a month. There is a difference. So how many paychecks in a year for biweekly payroll? We just went over this. Biweekly means every 2 weeks. So 52 weeks in a year divided by 2 weeks equals 26 paychecks in a year. So then the next question is how many paychecks in a year for semi-monthly payroll? Semi-monthly means twice a month. So 12 months times 2 pay periods equals 24 paychecks. At the college, I'm paid semi-monthly on the 10th and the 25th of every month. Hey, it's payday. Now we'll learn what the term gross earnings means. Gross earnings basically means your pay before any deductions. Technically, it's your regular earnings plus any overtime earnings if you're eligible for overtime pay. And another thing you need to know about is the Fair Labor Standards Act. The most important thing to know about that is that now since it says act, that means it's a law. So this law said that hourly employees are paid at least time and a half, 1.5 times, for any hours worked over 40 hours in a week. So let's say you get paid 20 bucks an hour and you are hourly. So if you work 41 hours, what that means is the first 40 hours you're paid at your normal rate, $20 per hour. But for that 1 hour of overtime, they will take your regular hourly pay, which is $20, multiply it by 1.5, in other words 1.5. So for that hour of overtime, instead of getting $20 for that hour, you'd get paid $30 for that hour. Now the 1.5 is the minimum. An employee could pay more, and sometimes they do, especially like on holidays. So more vocabulary. Overtime rate, that just means the hourly rate that an employee is paid for 1 overtime hour. It's also known as OT rate because we like to abbreviate everything. OT stands for overtime. So again, in my previous example, and if an hourly employee gets paid 20 bucks an hour, then their overtime rate is 1.5 times 20, so that would be $30 an hour. Overtime hours means the hours worked over 40 hours in 1 work week. So if you worked 41 hours, you have 1 hour of overtime. And then overtime pay just means you take your overtime rate times the overtime hours, and that is that person's overtime pay.